Hey everyone, this is Tim BitChute, joined with John Sneisen. And so I am from the Liberty Advisor Show. We've got John Sneisen from the Economic Truth. And today what we wanted to focus on was all the IPO, that's initial public offering debacles that have been basically plaguing the market, especially coming from all the unicorns. And then also wanted to give an update on the market and the Federal Reserve. And that's one of the main reasons we've got John here is to talk about all that stuff. And if you are watching us on the replay, and actually, hold on. I think I heard some feedback there. But anyways, if you are watching this on the replay, make sure you subscribe to the channel and ring the bell. I would also recommend checking it out on DLive as well. It's just another method to help get notified when we go live, as YouTube and Facebook are constantly jacking with us. And actually, the best way to stay in touch, you'll see the number at the bottom of the screen. If you guys text INFORMED to 71441, that's my book. It's called How It's Rigged. The economy, perfect for everything that's going on right now. I mean, basically, it's a cliff notes on how the GDP, how the economic data, how everything is all rigged. And I didn't see anything else like it. And so because I got sick of arguing with liberals about how great things were under Obama, I decided, you know what, no one else wrote anything like this. I'll go do it. And now I find that I'm using the book to then argue with Trump supporters. So go figure. So it's got dual uses, but that's what you get when you...
Hey, Tim, just one thing. We have an old title on our live stream, apparently.
An old title on the live stream. That's weird. Yeah. You know what? It may have done
breaking Justin Trudeau.
Okay, well that's definitely not accurate. Let's see. Will it let us do? If you are watching this on the replay, if you I guess bear with us a second. And of course, I'm on the Wham channel, and it's not even allowing me to see that we're even live. Okay, there we go. Well, Justin Trudeau and brownface, that's always a good conversation starter. But we did not mean that to be any sort of clickbait. I went into Restream, changed the title. I think John even saw me change the title on there. And let me see how we can change the title, because I'm not here to be doing channel, and it's not even any clickbait. But let me
we don't want to talk about Justin Trudeau anyways.
Okay, all right, Wham News Live, and right now Josh is probably having a heart attack because the first 2 minutes is critical. So we've got Wham News Live, got the date, and we are talking about the IPO debacle, the Fed, interest rates. So sorry about that. If anyone wanted to, I'm sure we'll just have to wait another day or two before there's another Justin Trudeau video out of him, parading around in blackface with a zucchini stuffed down his pants. So probably won't have to wait long until we get another video.
Okay, we are good, Tim.
Okay, sorry about that, guys.
We still got brown face on there, but that's okay.
It's still a picture of old brown face over there.
Yeah.
Okay, yeah, I did, and this is a quick aside. I did see somebody who posted, I'm more offended by him trying to act as prime minister than trying to, parade around in blackface. So I thought, I can't take credit for saying that, but whoever did say that, I thought was pretty funny. May have been Jeff Burke. But anyways, getting back to the show over here. So what exactly is a unicorn? A unicorn is it's one of these Silicon Valley startups that usually they don't make any money. They're actually losing a lot of money in most cases, and they have billion-dollar-plus valuations. And what was going on is a lot of these venture capital VC firms, they would invest into these startups, and then what they then would try to do is have their top-line revenue grow. So what that means in non-geek terms is basically they'd have more sales. And so all they really cared about is having more and more sales, get more and more market penetration, even though every new customer, they were losing more money. So there's no way to grow yourself out of a situation where it's not like, okay, well, I only have 10 customers, so now I need to get 100. But the problem is when you give 100 customers, you're literally losing more money than when you had 10 customers. But for a while, nobody cared. Nobody cared until basically, what's going on recently. And what's going on recently is that Wall Street now actually does seem to care. And if we bring it to a recent article we have over here that shows the IPO market has never been this forgiving for money-losing firms. And what the article goes on to say is that 83% of U.S.-listed IPOs in 2018 were companies that were not making any money. And so what used to happen, and this is a crazy thing from back in the day, what used to happen is that companies would go, they'd actually make money, they provide a service that people want, and then they would go and have an initial public offering. Now the companies aren't even making money, and they're getting these like multi-billion-dollar valuations and paydays for companies that aren't making money, and it's just absolutely crazy, the stuff that's going on. Now, one of the other guys who actually thinks that things are getting crazy and is our good old friend Jim Cramer. And even Jim Cramer is saying, of course, pop-up comes up. Kramer on recent IPO stumbles. These brokers need the money so bad, it's like there's no shame. So when you've got Jim Cramer talking about no shame, I mean, I think that's when you know that things are bad. When even like Jim Cramer's got a, and for those who don't know, he's the Mad Money guy that parades around as a financial analyst. And yeah, I think that's enough about Jim Cramer. And basically, what's going on with all the VC stuff is that when the venture capitalists they invest into these companies, so then that way they can eventually have an initial public offering. They can unload those shares to all the sheeple, and the founders are happy because they get big paydays. The VCs are happy because they get big paydays. The brokerages are happy because they're getting massive cuts right from the top. Big origination fees, which eventually are going to be going away when they have security token offerings. That's a whole nother subject. I've done a bunch of videos on that you guys can check out on the WAM channel. But the other thing that would happen is you'd have the brokerages when they got in. There usually going to be a little bit of a pop. So if you're able to be a broker and you have your client, get in on the ground floor, then sell immediately. There's usually, most of the time, there's a good pop. If you can get on the ground floor, then the brokers are happy because their clients are making money, which they're happy. And then everybody's happy until the music runs out and basically there's nobody left standing with a chair. And one of the people, or not people, but entity that is left without a chair, and one of the biggest unicorns of all, is a company called WeWork. Actually, now I think they're actually called We, and actually the founder sold the naming rights of We to WeWork for, I think it was $5.9 million. I've got that coming up later in one of the notes. But yeah, they charged $5.9 million. The founder charged to use the name We as opposed to having the name WeWork. So very crazy stuff going on indeed. But some of the stuff that's going on with WeWork, I'm not sure if you guys are familiar with this company or not. I mean, basically it's one of these companies where if you don't have your own office space, you can go combine with a bunch of other people. It's a cohabitating space. I mean, sometimes you can get your own deal. You can get like a little cubicle for people. You can get sort of like, it's basically like a Starbucks without homeless people that are there. I actually have a virtual office that I run out of. So it's not with WeWork. It's another similar company called Regis, but they're not alone. I mean, there's My Office Suites. You got a bunch of local places here in Phoenix doing the same thing. But I think the difference is the company I'm with, they're actually profitable, but it's not necessarily groundbreaking, and they have this amazing secret sauce that no one can figure out. I mean, it seems like a very kind of plain Jane type company that really shouldn't be gathering a $47 billion valuation. And I've had fancy office addresses. I mean, I used to have a building in across the street and from the Ferrari dealership in North Scottsdale. But most of my clients are coming from all across the country, and so I do a lot of meetings like just like I'm talking to John right now through Zoom. How I'm talking to you guys right now is actually technically through Zoom. And so with Zoom, I don't really need an office because everything I do is is virtual. And so that could be something that could also plague into WeWork's potential potential troubles down the road. But just digging into some other things going on with WeWork, one of the things, and John will probably find this funny because we didn't talk about this beforehand, is that they came up with something called a community adjusted what did they call it? They called it the community adjusted EBITDA. So that's earnings before interest, taxes, and depreciation,
EBITDA, yeah,
and amortization. And what they were actually saying was, and this is great, is that we are actually going to come up with our own EBITDA, which is actually, am I on the wrong article? Actually, here we go. Okay, let's see, where is it? Yeah, I mean, basically what they were doing is saying like all the normal costs that basically involved in running a business, like marketing expenses, you've got employee staff. I mean, they threw like basically everything in the kitchen sink into their EBITDA number, and basically sort of a laughable thing that they were doing, and and it was just basically crazy that basically nobody really called them out on this until the very last second. And even in this article, so right now I'm looking at an article, and you guys are looking at it too. It says unicorns aren't profitable. I got a stupid ad from unicorns aren't profitable, and Wall Street doesn't care. And then even this article then goes on to say, because this was from a few months ago, at the very least, public market investors, the sheeple, please don't be swayed by WeWork's eventual stock offering and its community adjusted EBITDA. So here they are like making a dig at WeWork, and this was several months in advance. So then you take a look at, other things going on with WeWork. Okay, here's the article I meant to pull up last time. So their community adjusted EBITDA it subtracted not only interest rates, taxes, depreciation, and amortization, but also basic expenses like marketing, general and administrative, and development and design costs. Now, the other thing, and I mentioned this earlier, is that the revenue more than doubled from 2016 going into 2017 from 436 million to 886 million. And the other thing that happened is their net losses also increased 117% to $933 million. So, I mean, it would be great to be in the olden days when, imagine telling somebody in 1950 that you'd have all these companies that literally are losing, in this case, almost $1 billion. I'm sure by 2018, I'm sure they probably did lose over $1 billion. But what WeWork was planning on doing is they were basically planning on having this, all the largesse that was going to be coming from their IPO, and then they're going to take that money and then use that to basically, give themselves a longer lifeline or more rope to basically survive. But now
to hang themselves with.
Yeah, you can also hang yourself, I guess, with rope. Or if you're, Jeffrey Epstein, you can have somebody else hang you and have all the cameras go out and have, all the guards asleep of the most, high-profile prisoner in America. But I digress. Thanks, John, to get me in. I'm like a squirrel, looking at nuts over here when I'm going over different things going on. So, so with WeWork, there's, the things, actually, let's get into some other things that were going on. So some of the other things that were going on is right ahead of the IPO, and we'll get this up on the screen right now, is that their founder, Adam Newman, he cashed out $700 million beforehand. Now, a lot of times what investors, the sheeple like, is they like to see that the CEO is invested into the company because that way they have skin in the game. And so when you take out nearly $1 billion ahead of time, it gives people, maybe a little bit of pause for concern. The other thing that he was doing that was pretty shady is that they were actually taking buildings. So some of the WeWork properties and commercial real estate that they own are actually owned by the CEO, and then WeWork leases it from the CEO. And the other thing they did is I mentioned this earlier, is that they charged 5.9. It's a different article here. Yeah, the WeWork said it paid the founders $5.9 million for this year, based on a valuation determined by a third-party appraisal. And so, the other thing they did is spent $40 million on a road show. This is basically them going around to all the big investment banks, all the pension funds, having a big song and dance about how great everything is and why you need to go invest. And just, it was like the beginning of August, this company was valued at $47 million. Now, because of all the shenanigans that were going on, I think even Wall Street, who should be smarter than everybody else, says, "Wait a minute, guys, this IPO is actually crap, and I don't think we should actually go ahead with it." Which is very rare because they do have a lot of money tied up in all this, in all the song and dance that goes along with the road show and getting in. A lot of people, greedy bankers and greedy brokers, wanted to see this happening, but they're not the only one. Another one was Peloton. For you guys that don't know, Peloton is a company where you buy these, $2,200 stationary bikes, and then you've got a big TV in front of it. So basically it's a $2,200 stationary bike with a big tablet, and then you can stream workouts. And I think it's like $20 a month. And you can stream those workouts, and it's just something where as somebody who I spent 10 years. I just sort of retired in this past June, but 10 years doing triathlons and. I've biked about 20,000 miles the past 10 years. So, I think I do have some gravitas to be able to comment on whether or not I think that this would work. And almost nobody that I knew that was in my circle has a Peloton. Matter of fact, I don't think anyone I know has a Peloton. And maybe that is a bullish sign. But as part of their valuation, I don't see the exact number over here, but I remember reading that basically their valuation would assume that you would need about 10% of all the fitness equipment sold in America to be basically at the hands of Peloton, which I'd actually argue is more of a...
that sounds very unsustainable to me, to be honest. But and also, you think about people that want to work out. Like, how about just go out in nature? Most people would prefer that instead of having a big bike at their house at home, or just be social with other people. But I guess they're trying to keep on that trend that people are more and more by themselves and they don't want to hang out with anyone as they do their thing. But I guess that was kind of their a thought behind it, Tim. But again, if they need to be 10% of all fitness equipment sold in the United States, then that's like extremely unsustainable.
Yeah, I mean, one would think that that it would be extremely. Actually, hold on. I thought I was going to cancel the Zoom. Definitely do not want to do that. Okay, sorry about that. Okay, yeah, and again, from experience here, there's a bunch of different software workouts, and like I mentioned, it's basically a software company. And what I would do personally, and this is what I did do, is I bought a bike for $1,500 that used to be a surgeon's bike, and that they bought for like $5,000. It was used for a few years. They went to go buy a brand new like $10,000 bike, so I was the beneficiary of their $1,500 one. And then you can buy, there's a program called like Perf Pro where you can basically and nowadays there's stuff that's way better than what I have. So I bought a similar type trainer, I guess, to like Peloton, but you put your own bike on it, and I can ride any course in the world. I can adjust. I can put pre-programmed workouts in it, and it does make you get very, very fast. If you want to get very fast, you train by power. You also what you do is you can set it so that way. Let's say the flywheel won't even move unless you're going X amount of watts, and it keeps you honest. But there's ways to do that are so much cheaper. And then guess what? I can take my bike off the trainer, and then I can go ride it outside, and then I can go put it back on. And I would much rather do that. And that's what I have done. You can Strava is another app. It's sort of like I guess like a Facebook for triathletes and runners and cyclists. And you can buy workouts on there. There's spinnervables. You can go turn on the TV. Like I mentioned, you can buy even like a top line trainer that are connected through Bluetooth, so you can program these workouts. That from your phone that then goes right to your trainer. Tons of different stuff. And this is me talking from my own experience. I hope I didn't bore you guys with that. So that's why I just wanted to give a little bit of my own experience with this, and I wouldn't I would not be bullish on that company at all. And then you've got other companies such as Blue Apron. This article came out a year ago, but they were a 90% drop, making it the third worst U.S. IPO this decade. I think I'd already mentioned. Yeah, Peloton just came out.
Yeah, and then you got Beyond Meat is another one that's kind of slowly failing now. It seems like.
Yeah, Beyond Meat. You had Uber, Lyft. I mean, and it just goes to show you that it's just very unethical that they basically put these valuations at extreme, sky high, ridiculous, stupid valuations, and that way everybody gets paid except for basically whoever the bag holders are that are dumb enough to go and buy this on the IPO, which usually buying at the ground floor is usually a good idea. But when you have companies that are not only are they not making a lot of money, they're actually losing money. And so great, we want to get more 10% of the market share, and so that way we lose a bunch of money. And I don't know, maybe their play is you get a whole bunch of people to have these machines in their house, and then they're all paying you $20 a month, and then you can only hire a couple trainers doing different things, and maybe it will be successful. But I already just mentioned all the different reasons and things that you can do. Personally, I'd rather just take my bike outside, and I was started my first Ironman training in the snowiest city in America, so I did do it so that I do get that there is a need to be outside or be inside, and now I'm in like the hottest place in America, so it's a different reason I go inside sometimes. But yeah, I mean, that was all this stuff. The only reason that all this stuff has been able to go on is because of the low interest rates, the Federal Reserve manipulating things. And so, yeah, a lot of these, big VC companies like, SoftBank's Vision Fund, if you're able to borrow money at next to nothing and you can go take a flyer and you're like, well, hey, I'll put in, $1 billion, and that $1 billion will give it a $30 billion valuation, and we'll do a few tweaks and we'll IPO it in, a few months, and then we'll all make billions of dollars. And we don't really care, if the company's making any money, because we're all going to cash out. And, eventually the music stops. And right now the music is stopping. I mentioned earlier, it was like over 80% of the companies that have IPO'd have lost money. I personally think things are going to go the route of the security token. And so if you guys go back to on the WAM channel, there's like a Tim Picciott Liberty Advisor section, and I've got several videos on security tokens, so I'm not going to belabor that now. But now we're going to kick it off. You guys are sick of hearing from me. I know John actually has a rough voice today, so he actually did ask if I could talk longer. So I know I'm going to hear it in the comments that I talk too much, because everybody loves John. I'm just the sideshow. I'm the warm-up act until we get to John. But now we're going to take it out to John, and he is going to show us or tell us what's going on with the interest rates, the Federal Reserve, the repo markets, and basically all the craziness that is going on. So take it away, John.
Yeah, so what I'll do is I'll just introduce ourselves so we get another good, because what me and Tim are doing now, we're doing the live stream, but we're also doing a couple of reports. So just bear with us. I'm going to just do an introduction, and then we're going to get into it. And after we're done with that last report, we're actually going to, do some Q&A with you guys and and hang out for a bit answering some questions, because there's a lot of questions to be asked and answered, to be frank. So yeah, let's get started, Tim. Hi everyone, this is John Sneisen from World Alternative Media, and today we're joined by Tim BitChute, the Liberty Advisor, and we are going to talk about what's going on with the Federal Reserve. What's happening on their balance sheet? What are they doing? It seems like they're doing some form of accumulation of assets, and what are those assets? And talking about what's happening with the repo, the repurchase operations that they have, and what really that is. We're going to go into detail about that, and then also some reports that just came out today that scared the market first. They dropped almost 1% plus, and then they recovered to over 1% in for some reason, which is almost kind of unknown. When there's always this scare, Tim, that you see that suddenly they get scared in the economy, and they're getting afraid of a recession, and then suddenly it just disappears for a couple of days again, and then the fear comes back again when there's new numbers that are getting dropped that are just confirming, we're heading towards a pretty deep recession, in my point of view, that I'm thinking, because we printed so much money. Now, let's go and take a look at, Tim, at the current market operations, the repo market, and if you go, just give me 1 second, Tim, here. I'll pull it up. And how about you just talk a little bit about what your thoughts are on the repo markets, and then we'll go straight into, what's currently happening there.
Yeah, so we're at the NewYorkFed.org website. John has pointed us to. Hey, can you? Sorry, I was muted, so that way if I was doing background stuff, you guys wouldn't hear me typing. My bad.
Yeah, so sorry about that.
Yeah, so right now we do have it pulled up from the NewYorkFed.org, and what is going on over here is it shows the different amount of basically financial transactions that the banks want to have, the ones that were submitted versus the ones that were accepted. And I think one of the kind of things that stands out to me, and I only saw this chart right before we were live, so I haven't had a ton of time to study this, is it shows submitted with the mortgage-backed security operations, 3,701. This is in millions, but they only accepted 479. So part of me, at a quick glance, what that basically seems that the banks probably have these assets that they want to get rid of, and they're like, oh, hey, the Fed's doing another secret bailout, quantitative easing, even though we're not going to.
Well, yeah, Tim, this is a quantitative easing. Like, what are we seeing there? Nobody has reported on this that I know, anyways, about the what's called the outright agency mortgage-backed security operations and the outright treasury securities operations. Now, when you take a look at that, they submitted, as you said, $3.70 billion worth of mortgage-backed securities that they wanted to have purchased by the Federal Reserve on October 3rd, which is today. And then only 479 million. Well, only 479 million. That's not a small number, to be honest. It's actually a big number, and that's why we're seeing them. How we were talking about. You were talking about this. How the Federal Reserve, their balance sheet is increasing. Well, here you go. Here's the proof in the pudding right here. They're buying mortgage-backed securities again, and then of course and you look at the outright treasury securities operations. Now you're looking at $5.829 billion that have been submitted, and $2.201 billion that the Federal Reserve has actually bought off of whoever is submitting all this, which is most likely the banks that are trying to offload risk onto the Federal Reserve, getting rid of a lot of their bad debts that they had, of course. So here you just in one day you're looking at what is the quick number? It's $2.680 billion that have basically been in a mini quantitative easing. It's actually not a small quantitative easing either. When you look at it, it's 2.68. So that's a highly substantial move. And then if we go and look at, of course, the current operations, Tim, the repo operations, you're looking at, like, they were supposed to have this done. What was the actual move, Tim, that they were talking about? I think they were talking about that they were supposed to be done by
October 10th, I think.
Yeah, October 10th. So they're currently, keeping on going here. Actually, what was interesting, I looked at
now, who wants to make bets that this is really going to end October 10th? I mean, I'm not willing to go like straight on McAfee and bet, my what, but I would be a very strong betting man that there is no way that this is really going to end on October 10th.
Yeah, no, what I think is it's just going to be another announcement. It's like, oh yeah, we're just going to continue doing it, just as other, like the NDAA Act and all this stuff that the government is doing, like, yeah, we're just going to, renew the emergency acts, and then nobody really understands or sees that it happens, but they're just going to renew it. What was interesting actually yesterday, the interest rates were as high as 3.20% in the repo market, and that is interesting because that was a whole 100 basis points of 1% off of what it's supposed to be at, with the Fed manipulation that, after it came in, when the markets really panicked with the liquidity crisis back on the 17th, I believe it was, you saw like that whole move up to almost 10%. Now, of course, it had a bigger move again, up to 3%. So that's a substantial move again. And it's trying to tell us that, it's not all over. And when you looked at also something called the reverse repos, where they basically are, another way of printing more money. And what you see there is there's more and more participants. It's called participating counterparties that are getting involved in the reverse repurchase operations. Again, so you're seeing that on top of it, and that's might be another feed of quantitative easing into the markets on top of the of course the repo operations that are overnight, basically a line of credit that the Federal Reserve puts out for entities that are struggling and that needs to take out a loan. And of course, when this hit up to 9% there, that was almost at the end of or the start of the big greater. Well, I believe we've been in a depression since 2008. We just papered over it, but I think it was just the start of something really big. And of course now you're looking at the constant supply of liquidity to the markets in order for it to survive every day. Like you're looking at anywhere from like 30-40 billion up to 100 billion almost.
Nothing to see here. And the reason why what John was saying that he thinks that we haven't gotten out of recession is because if you take a look at what the stated inflation rate is like 2%. Now, if the real inflation rate was really, let's say 6%, and I'm just throwing out a number here, and I don't think that that's actually too crazy of a guess. If the real number was 6% and the economy is growing at 4%, then technically the GDP would then be -2%. And so that's just one of the ways that they rig these numbers. And so not to give, it's a free book, so I'm not making any money from it. But if you guys want to know more, that's like this basically a perfect cue of like what the basically my entire book was written on this exact subject. And everything supposedly is fine. Yet we have $160 billion worth of liquidity that's been extended to the bank. So maybe it will end on October 10th, because maybe like on October 9th they'll be like, okay, here we'll lend you $1 trillion for a year. Maybe I'll be wrong if they do some crazy thing like that, but I think at that point I would also be right. And so I don't know if you want to get into, also we've got pulling up on screen, you got the different on trading economics. We have the yield curve.
Yeah, before we're gonna do that, I think we should listen. Like, I want to listen a little bit to what the treasurer at Goldman Sachs has to say about this and what's going on there.
And that's also Goldman Sachs and Government Sachs, for those of you who Goldman Sachs.
Yeah, exactly. They're everywhere. Mark Carney, Mario Draghi, all these big guys that are running the central banks are former Goldman Sachs guys.
Steve Mnuchin.
Yeah, Steve Mnuchin, right? So most of and Hank Paulson,
Steve Bannon from Breitbart even was.
Yeah, there's like most of these guys. So it's interesting. But let's listen to and see what they actually think about what's happening in the markets here. And this is Hammock, which is treasurer for Goldman Sachs.
And it's become less and less of an issue as time has gone by. What's the longer term effect of all these daily repo operations? So the daily repo operations have really served to smooth the markets out. We had this very acute stress that happened on September 16th. as reserve dropped in the system. And the Fed stepped in pretty aggressively to make sure that liquidity was brought into the system, particularly over quarter end. And so we navigated through that really smoothly. I think what the market's going to focus on from here is what's the permanent solution. So they're coming in every day. And what we really want to look at is what's going to be this longer term solution that'll get us through the fourth quarter.
But what are those longer term solutions that you believe that the Fed does have to implement, and how hard will it be to get those solutions done? I think that there's a little bit of concern in the market that the Fed won't be able to announce something by the end of this month.
Yeah, it is a concern. The Fed has announced that they'll be engaging in these open market operations through October 10th. On October 9th, we'll get the FOMC minutes from the last meeting. I expect there'll be some reference in those minutes about this event, given that it was happening just as they were going into the meeting. And from there, we'll get an expectation as to whether or not they'll be growing the balance sheet at the end of the month. On their October 30th meeting, I think the market generally expects that they'll continue with balance sheet growth that would put more reserves back into the system and take some of the collateral out.
How can it convince the market that this isn't, though, quantitative easing under another guise?
Quantitative easing?
That's a great question. Quantitative easing
we're just going to take out a
different
thesaurus
in that
and figure out different words.
Different. The actual fundamentals are the same. Yeah. They're growing their balance sheet. They're adding to securities in the portfolio. But I think the goals behind it and what they were trying to accomplish was quite different.
Way different.
The Fed's balance sheet has always grown. So you went into the crisis.
This money printing is not like last time.
$800 billion. Obviously, quantitative easing through the crisis took it up to $4 trillion. It's been coming down.
Last time central banks only had to print 16 trillion. This time it's going to be way more.
Reserves back into the system that they want to have the
those are rookie numbers.
This is enough. I had enough of this bullshit. Come on. This is so interesting, Tim, because he's saying that, but the interest, their balance sheet has come down. Well, where did it come from? Like, it's not even a third of the way down of what it used to be before they started all this quantitative easing, buying all these assets. And now we're seeing literally, like, they're talking about the repo operations, but then they have side operations on top of that, the after buying of these mortgage-backed securities and treasuries to prop up the market. Because also what's happening right now with the United States is that the U.S. is doing over $1 trillion plus almost $1.1 trillion in deficit spending currently. And all that treasury debt has to be bought by someone. And of course, there's not too many actors that are willing to buy U.S. debt anymore. So who's the buyer of last resort? Well, that's going to have to be mostly, of course, local, pension funds within the United States, pension funds and organizations like that.
And I actually think that's going to be the major catalyst for, when finally things go, is when the pensions. I mean, basically, they are damned if they do, damned if they don't. So there's two things that can happen. Either, I guess, three things. Either rates stay the same and we're at the slow bleed that we're in right now, or rates go up. If rates go up, they're holding on to all of these bonds already. And what happens is when the interest rates go up, the underlying value, it acts like a teeter-totter or a seesaw. So if rates go up, the underlying values of the bonds go down. And so if you have a 10-year bond and rates go up 1%, you've got $1 million, and boom, you just lost $100,000 of principal. If rates go up 2%, then your $1 million is now about $780,000. It's called interest rate risk. No one that's retired right now or about to retire has ever had to worry about that in their lifetime, because basically since right around the time John and I were born is right around the time when the rates started going down. And so people have only experienced rising or decreasing interest rates for the most part. And I'm sure there'll be some baby boomers who are commenting, oh, BS, I remember back in 1980. Well, guess what? I said retired or about to retire. So you probably weren't retired, because I know I've made this comment before, and I get people that are trolling me about that. Like, you don't even know what it was. Yeah. So anyways, what is going to happen is if the rates do go up, the principal reduction would be so great that as they're pulling money out, there's no way they're ever going to be able to return to the levels they were at before. And if the rates end up going down, then all the bonds they're holding aren't going to pay anything, and they're also going to be screwed. So, I mean, basically, there's no way out of the situation. I wrote a letter to actually, it's funny because I emailed this client again today, but I remember this guy, Michael, I emailed him in 2011, right around the time of the, I forgot if it was Moody's or S&P that downgraded, even though John and I just talked about this the other day. And it was right around the time of the downgrade, and I mentioned this exact scenario, and I got in trouble because my email was being monitored, and they're like, you can't make a prognostication that that the Fed is stuck in between a rock and a hard place because you are just making wild assumptions. And like, boom, okay, yeah, my wild assumption was right. Every single financial expert was, besides John and a few other people out there, was wrong. So, not that I'm taking any victory laps on any of this stuff, but I really do think it's the pension. I mean, at this point, I can't believe that. I mean, I don't know. I mean, 17 trillion in negative global interest rates didn't scare people away. Printing all these trillions of dollars didn't scare anybody away. Having this $160 billion operation didn't scare anybody away. So I don't know. Maybe it's when the pensions get to be. Maybe it's when either when the pensions bust or when you have, maybe interest at $1 trillion. So even if rates are like 0.1% and then the interest is still at $1 trillion, maybe that's when the sheeple will wake up. But it's just, I don't know. I mean, I don't know. I've overestimated how smart people are, and I think that generally most people are pretty dumb about this stuff and didn't give them a lot of, credit to begin with. But they've really even surprised me, and obviously not our audience. I'm not talking to you guys. You guys are listening to us, so you're smart and you're doing your own research on this stuff. But the average person out there has no idea about any of this stuff. But sorry for rambling on. I wanted to give John a chance to rest his voice over there. That's my excuse, and I'm sticking to it.
Yeah, no, it's well. Let's go back to this because I just want to explain actually with what we just described the actual outright agency mortgage-backed securities operations and the treasury operations, because what that says is like just with the mortgage-backed securities part of it, they have a plan to purchase a maximum of $3.3 billion worth of mortgage-backed securities per day.
Mike Tyson had a good quote about a plan one time. He said, "Everyone's got a plan until I punch him in the face," and so that's exactly what's going to happen with this too. Sorry.
The Fed gets punched in the face by the free market economy. That's what's going to happen.
Maybe they get their head chopped off by the all the helicopter money they're going to be thrown out there.
Yeah, some stupid guy was sticking it like they're down on the ground.
I don't know.
Right?
Maybe Bernie Sanders is in the hospital. So and actually it was in Vegas. So maybe he got scared thinking Josh was over there again, going to heckle him. So, but no, don't wish anything wrong with Bernie. But he is the progenitor of the helicopter money. I did see a really funny meme the other day. It's like in 1996, you had it was Elizabeth Warren adopted the Cherokees to get ahead. Then in 10 years later, she adopted herself as a Democrat to get ahead, and now she's adopting herself as Bernie Sanders to get ahead. Just taking his strategy. Anyway, sorry about that.
Yeah, but no worries. But this is what's happening. It's basically like a shadow QE that's going on right now. On top of we're not talking about the repo operations at all. We're talking about what's called the outright purchases of MBS, mortgage-backed securities, and treasuries from the United States Treasury. So the debt that the U.S. is printing. So this is breaking news, guys. What's happening here? We are actually, well, it's not breaking news really because it's been going on since the 30th. No, it's been going on since the 30th of September. But still, it's actually news because nobody's really talked about this, and it's important to get that out there that there's a shadow QE going on right now on top of the repo operations. So they're hitting it from several places here to try to, paper over and hide again this, massive liquidity crisis that are starting to unfold here with, of course, a lot of problems. And what I'm working on and what I'm going to have Tim involved in as well is we're working on a big report on the global economy and what's going on there. And particularly what we have focused in on, Tim, was the corporate sector, because there's so much bad corporate debt there. And we were looking at, I was looking at numbers of how much corporate debt is rated junk. It's almost, 30 to 40% that are rated junk, but then also like close and near to junk is rated another 30-40% on top of that. So like almost 75 to close to 80% sometimes of corporate debt from non-financials. So this is like the corporations, regular corporations that are not, the big banks. They were, they're struggling. They're really and this is, coming at a point where, can we even trust these rating agencies? And then their ratings are, terrible already. Like Moody's, S&P.
And look who owns them. You got guys like Warren Buffett, who owns them.
Yeah.
And then Warren Buffett then also owns a lot of the big banks. I mean, he's got big shares, I think, in, I know Bank of America. I think, obviously, Wells Fargo, Goldman Sachs back in 2008. He had a big sweetheart deal with them as well. So he actually owns a bunch of these banks. And yet here he is now being the arbiter of, deciding what's going on with these banks. And the other thing you mentioned, these bonds. Well, if you have all these triple B rated bonds, which is the lowest grade of investment quality, if they go from triple B down to double B, then you're going to have billions. And I mean, I'm sure John has the numbers for us, but you're going to have just a ton of bonds that now all of a sudden are going to be forced liquidated out of pension funds that are mandated to hold a certain percentage in investment grade bonds. You're going to have all the big insurance insurance companies, a lot of the ETFs that are investment grade bonds, and then it's going to have, and then the selling is going to get more selling, and it's going to tie into a live stream that John and I did a few weeks ago about how ETFs could be a big or index funds could be a big catalyst for what's coming ahead. And the other thing you have in terms of shadow QE, just the fact of money of how money comes into the system is a shadow, basically stealth quantitative easing, because what happens is the Treasury, first off, it's ridiculous the Treasury doesn't just print the money themselves if they're going to do it, but then it's bad enough that they just don't even just borrow directly from the Fed. So what they do is that the Fed, that you have the banks who then are borrowing money from the Fed, and then the banks, then you've got the Treasury who then takes the money from the banks, and then so let's say you're the Fed and you are lending money out to Bank of America hypothetically at 1%, and then they turn around and then lend it back out to the U.S. government at 1.25%, and they get a guaranteed, I'm just making up the numbers right there, but a 0.25% arbitrage, or in this case 25% arbitrage for doing nothing, which I'll take that deal if I can get it. Like, okay, I know that you definitely want to buy this, and you're going to sell this at X, and I can sell it to you for more than X. But, the fact that it's through the U.S. government, and then who owns the Federal Reserve? It's the banks themselves. And the Fed gets 6% interest of all the profit.
7%.
Are you sure? Maybe we'll...
Okay. I forgot it was 6 or 7% per annum. It says,
and
in
you
the Federal
can find
Reserve.
it on the Federal Reserve. So next time John talks, we'll look up. But you can find this on federalreserve.org. Or I don't know if it's org. I don't think it's .gov because it's not a government agency. But you can find it directly on the Fed's website, and they spin it as, we give back 94% of the profit or 93% of the profit, instead of saying we take 6 or 7 off the top. And if people knew this, they'd be outraged. That's why you had Henry Ford said if Americans ever understood the banking system, there'd be a revolution before the morning. And he said that, I believe it was like 1903, 10 years before the Fed. And so it didn't get any better since 1903, I can tell you that much.
Well, so another thing that I'm looking at right now, Tim, on top of all this, well, actually, before that, I want to talk about, for example, like we were talking about rating of corporations. One thing that I found very interesting, Tim, and I've been looking at a couple of corporations already. I was looking at some auto corporations, looking at their balance sheets, looking at their ratings and so on. One that really stuck out to me wasn't an auto company. It was, of course, me and Josh have reported on this before, General Electric, which used to be, one of the biggest corporations in the United States. They are, have a terrible, they have, I think it was only 6 quarters that had a positive return for General Electric, and all the other ones since 2009 has been negative. And what's really interesting is that this corporation is actually almost about to be rated medium grade by Moody's, by being, I think it was Baa1, it's rated, which is ridiculous when you look at, their balance sheet. Well, yeah, they've been offloading debt. They're down to 92 billion right now in debt. But again, that doesn't really matter because they have so much debt. Their whole business model is falling apart as modern times are coming.
Well, one of the reasons I know exactly why. One of the reasons, cause it was, I believe the guy was Henry Markopoulos, who was the same guy that blew the whistle on Madoff, came out recently, and some of the criticism from GE, just to play devil's advocate, was that he was hired by these hedge fund guys to put out this report, but oh well. But so GE had a unit, a subsidiary called Genworth. Genworth was a long-term care company, and basically the actuaries, and I'm a financial advisor, so when I'm not a libertarian activist, also helping people plan their finances. And so I have seen the quotes, and Genworth was almost always the cheapest by far. And unfortunately, in Arizona, you've only got one choice. And when I was in New York, you had more. But the long-term care market is basically dead. And the reason it's dead is because these companies had to keep a certain amount in investment-grade bonds. And now that those bonds pay nothing, they had to jack the premiums. So I've seen premiums that are basically 200-300% higher. I've seen people. I had some clients in John Hancock where they went back and had to raise even people that had already purchased policies raise them by 20-30% because they couldn't just afford what's going on. So there's massive unfunded liabilities that they have through Genworth, which is a long-term care company. And I actually have sold a Genworth product to one couple before and let them know, some of the risks that were associated with that. But it was, so much cheaper. That's one of those cases of, if it's too good to be true. And a lot of people think that these things will end up getting, bailed out, especially since, it's basically government electric. We talked about government sacks, but it's the long-term care. People are living longer. A lot of the policies back in the day, were, you could, pay, they were, the benefits were amazing. Like you could have like 10 years of coverage, whereas today, a lot of times you're only buying 3 years of coverage. And then in some cases you can then even get on, this is getting into a whole boring conversation nobody cares about. But I do have some firsthand experience with Genworth and GE and the long-term care market. And the long-term care market, I can tell you right now, is basically a complete mess and it's completely dead. So if you bought a policy 10 years ago, congratulations, you're doing well, you made a good decision. But going forward, it's very, very difficult to have to plan for these things.
Yeah, no, definitely. And and of course, on the other side, there's a big slowdown happening in the economy on top of all this problem. And of course, GE, among others, have been doing share buybacks, which is, to buy back their own shares to prop up their share price to then give their investors higher dividend yields, of course. And that's also the higher dividend yields are forced upon by the printing of a currency by the Federal Reserve and other central banks. So you're looking at, just a triple, quadruple whammy here for whatever direction you're looking for the monetary system. Of course, I just want to mention, I sent you a link for Market Watch. It just came out. It was Fed Kaplan's willing to back more rate cuts if necessary. So this is just Federal Reserve's Kaplan. He just had a speech today, and he said that he's willing to back, of course, more rate cuts, which is coming. There's going to be probably, who knows, if this continues, there might be more drastic cuts, like 0.5%. But we'll see. But we
also have an article up here right now
over the last 2 days, Tim, as well. With the whole trade thing going on with the European Union, with Trump and so on. And it was some severe hits. You had the DAX, I think, was down, like the German stock exchange was down 3% almost over day over day. And then the whole market was just trembling. And then suddenly gold was squished down, to below 1,500. And it came back up again today, or over the last 2 days, all the way up to 1,511 again. So you're seeing so much volatility in the markets right now because there's so much uncertainty. Nobody's knowing what really is going on. There's talk about the trade. Oh, it's all about the trade wars. That's all what's causing this. And then you see manufacturing PIs, that's coming out from the United States. You're seeing different ones. If we go and look at the Chicago PMI, for example, the Chicago PMI is starting to look closer at, we had a crisis back in 2016 there, where we almost had another financial crisis, but of course they papered over that one. Now we're getting close to those levels again, and we're getting close to the levels of 2000 and 2009 and 8. With manufacturing slowing down.
We do have that pulled up.
You also have the non-manufacturing PMI from the United States. That one is down.
Well, I do have it pulled up right now.
I've
got it pulled up right now. In September 2019, it shows it slipped down to 47.1. I think these are numbers that basically, I think the last time it was this low was like March 2009, and basically in the depths of the recession. The other thing. There's one more thing I want to point out real quickly is going back to GE, is I did pull up an article that says, this is from March 2018, GE's $24 billion buyback boondoggle. And then it goes on to say that the average share price that they bought their stock back was at $30.30. And if you take a look at it today, I think I just had it up here. It was like $8, I think, $8.71. And so here you go. But the reason the CEOs do this is because that now there's less shares outstanding, that automatically then increases the earnings per share. A lot of times the CEOs get paid nothing, salary-wise, or hardly anything, but their compensation is tied to stock. And so then they end up, reaping. I almost said raping, but that'd be another one too.
It's pretty close.
Reaping all the benefits. It's funny. One thing, whenever I go to type in my phone fascist, it always autocorrects it to racist every single time. And a lot of times, in context of talking about liberals, I'm like, yeah, this sentence does work, but it's not the sentence I really wanted. But anyways, getting back to the PMI index. Sorry, I just want to let you know.
But it's not only the United States that are struggling. It's I looked at PMI numbers. I've been keeping an eye on them for a very long time now, over the last 3 months. And PMI
the German one was crashing big time.
Oh yeah,
we talked about that last episode.
Yeah, they're crashing heavy, right? So what you're seeing is a global slowdown. It's and this is again, it's all this cheap money from the central banks. They're all implicit in this massive bubble that they created again, printing money out of thin air, dropping interest rates to near zero. And now, of course, they couldn't even get it about 2.5% before they had to cut it again. And look at, most European nations have negative yielding debt now that they're, shoving into the pension funds for a loss.
They need some Viagra because they're having trouble getting it up. I mean, it's been 10 years and they still can't get it up. And
but again, go ahead, Tim.
And I've pulled up the German manufacturing recession deepens, growth outlook darkens, and it's saying that this is the weakest data they've had in Germany in the past 10 years. And wasn't Trump basically holding his hat on the manufacturing coming back to America? And I do believe I did talk with a CEO the other day of doing a lot of stuff overseas, and they are in China and bringing a lot of stuff back here. And that's just one anecdotal story, but it's everything. Unfortunately, Trump didn't come at things from a philosophical standpoint, and everybody and Americans just do not have. I'm American, but just do not have the gall or do not have the wherewithal to withstand any short-term pain. So everything has to so we can't plan long-term. Everything has to be short-term, and I do agree that there needs to be some pain, but you can't tout you can't tout up. We're going to have 4, 5, 6% growth rates from here to as far as the eye can see, and everything is going to be going great, when at the same point you're going to have a trade war, because that is going to have negative consequences. And if that does need to be done, then you need to just level up with people and let them know what they can expect. But if you promise them the moon and then you deliver them, the ground floor, they're not going to be very happy with that. And so I think that, unfortunately, is one of the problems I have. And then if we do end up going into a recession, I can pretty much guarantee you that Trump is not going to be the president. And that's not me wishing any ill will on anybody. That's just me as a political commentator who, predicted him winning and, have a signed Trump hat. So, everyone's saying that, I'm some big TDS, Trump derangement syndrome person. I spent $3,000 on targeted Facebook ads to convince people to vote for him. So, unless you did that, then I don't know what you have to complain about, because I helped get him there. So, but I'm calling things out. And I think, and one of the main things that I got pissed at is the fact that he put Jerome Powell in there. And now one of his biggest problems that he admits is freaking Jerome Powell. So, I was right on that one. You guys can go back to the podcast from the day that he came out, where I was just, and actually I was swearing, it's not a family friendly one. I was swearing quite a bit because I was so upset that he picked, because he had one awesome pick. I think the guy's name was James Allison, head of M&T Bank, hates the Federal Reserve, even though he's a bank CEO. And I was like, oh man, if this guy gets in there, this would be awesome. Because, he had like Rick Perry, who hated the EPA, then in charge of the EPA, and a lot of other stuff like that. So I thought it could happen. And we had that tweet from Trump in 2016, where it's like, what's the guy's name? Lion Ted Cruz missed the vote and audit the Fed. It's so important that we audit the Fed, and threw a dog whistle to all of us. And now I feel like he just sort of pimped us out, played us out. And now there's nothing they can do to get rid of him. And I said from day one, if he does 1,000 things, if he wants to get 1,000 things accomplished, and he gets 999 done, but he doesn't, change the ball of the Fed, then I don't care about the other ones. And unfortunately, it's not some, crazy thing that everybody thinks that, he's going to nationalize it, or he's really going to send everyone to the Fed at Guantanamo Bay, or he's going to have Ripple come in and have that be the new currency. I see so much stupid stuff out there all the time. And guess what? None of that stuff's going to happen. And everyone that's waiting for it to happen, you guys are the problem, because everyone needs to be taking action right now. You don't need to trust the plan.
Yeah. Well, personally, Tim, I think the SDR is going to be their outcome of all this. I think they're going to start printing SDRs to bail out all the central banks.
Yeah, I think they're going to have their own Libra, which is the Libra is basically the SDR if you look at the underlying basket. And I had a video the day before the white paper was released predicting that it would be modeled after that, not even knowing. Yeah. And so that's up there on the WHAM channel that you guys can check that out as well. But we shall have a one world government, whether it's through consent or conquest. That was Paul Warburg, who was Daddy Warbucks in the play Annie. And he made that quote, and I think what they're going to do is they're going to get things really bad, but they wanted to have Hillary in there because they wanted to have the guns gone. They wanted to have a big social credit score like they have in China, and then not that they're going to be able to get the guns, but anyways, they want to have you okay with trading your dollars for this BS, SDR, FedReserve.gov coin, and then we can then track, trace their value, and then Tim and John and Josh were talking crap about us. Boom, we're going to dox them, or boom, we're going to make sure that, we're going to take away 20% of your money or all of your money. And that is the goal. That is where things are going. Look what's happening in China. And this should be, yeah, I get upset about this because this is everybody's future. This is my children, your grandchildren, your kids that aren't even born yet. This is their future at play here, and we're having central bankers who are trying to rob everybody. So, you know what, Greta Thunberg, you want to have your future stolen? Well, guess what? The real thing is they want to have a carbon tax to be the thing that steals everybody's future.
Well, but what's interesting about Greta is that she said that the banks will save us.
You know, let me. We played that clip last time, and
we did it.
You couldn't believe it when I said. And actually, it was give a shout out to Kingsley Edwards who sent me that clip. So thank you, Kingsley.
Thanks, Kingsley. Yeah, no, it's just unbelievable what's going on right now. But I gotta get going soon, Tim. So let's just wrap it up here, and then maybe we'll take like 5 or 10 minutes at the end, taking a couple of questions before we leave. But let me just finish this report off. So this is John Sneisen and Tim BitChute signing up from World Alternative Media. Find the truth, be the change. Okay, so we're done.
It's good when you end it because I always mess that one up. So
So we're done now. So me and Tim are done. We got we'll stay around for another 5 to 10 minutes and take some of your questions. So Tim, if I don't know if you want me to look up questions or
okay,
if you want to do it.
Just pulling it up right now. Looks like we got a bunch of stuff from before. Sorry, and then we are testing out something called XSplit. I was using Wirecast, and for some reason it seemed like the screen's going out, even though I'm not touching anything. So I don't know what's the deal with that. So I do apologize. Okay, so let's see if we've got any questions here. Let me just kind of go back up to the beginning and see everything that's coming in. Old news video title. Yeah, we accidentally had that video title. I put it on Restream and then the real one, and then for whatever reason it auto defaulted to whatever the recent one is. So sorry, there's not another fifth or sixth Trudeau blackface. I mean, there probably is. That's
somebody said a 10-year Great Depression will result in a U.S. zombie apocalypse. I would just see like especially the guys over at the Fed would be like, QE must have cash. That's what you're gonna see. You're just gonna see like the horde of PhDs are gonna start climbing out of the building over at the Federal Reserve all around the 12 districts, and that's gonna be the start of the zombie apocalypse. You're gonna have them just come drooling and trying to find cash in any crevice or anything in your house.
You're gonna have Justin Trudeau showing up in blackface with a zucchini in his pants, be like, "We need more money to keep everything going."
Well, basically, what these zombies are gonna eat, they're gonna try to eat cash. That's all they're gonna survive on. They're not, flesh-eating zombies that we thought that we would see. This is just like zombie PhDs that are running around, scouring the world for cash and desperate. And then of course they're going to take us all into a cashless system. What's interesting, Tim, is I'm going to be speaking, and I should promote this actually, and check this out, guys, because I'm going to the Red Pill Expo, and I'm pretty sure you'll see Josh there as well. That's going to be in Mesquite, Nevada, right outside of Las Vegas. And I'm actually gonna be one of the speakers talking about 5G, the potential police state 5G technology is going to do, because one of my backgrounds is in telecommunications, and of course I do think I have a little bit to say about the technology behind 5G, and I'm going to talk how that could be integrated into a total totalitarian grid, which is actually happening in China right now. So I think it's very interesting to see what's going on over in China, and where we're kind of heading in Canada, in the United States, because like the cycle is in, we're losing, like the governments are losing their power with their fiat currencies. They're going to double and triple down on authoritarianism. Tim, that's what I believe we're going to see. And then, of course, at the end of it, we're just going to see them completely fail. They're either going to turn into total tyrannies or total, free economies, where there's going to, it could be very likely that we have some sort of anarchy, not the one that you see with Antifa running around the streets, throwing and destroying things, but actually no rulers, which is the true word of anarchy means no rulers. That nobody is ruled by a elite political class in a feudalist system that we're in today. We basically replaced the kings and queens with politicians to run our lives. and now we're reaping, well, not the benefits, but we're seeing the actual outcome of
Now we're
this.
reaping the police state in the former home of the
Yeah,
free, land of the slave.
yeah,
And,
yeah. Unfortunately, we do, Tim, and it's very sad. But have you seen any other questions that
well,
we
yeah, I
should do
see.
before
Greg
Yeah.
H was saying that he texted the number wrong, but then texted it right, and so he got the book. So thanks, Greg. Let me know what you think. It's just something I did.
Yeah, I don't know. Is that Greg Hill? I wonder. Could be
Greg
Greg
H,
Hill.
so might be.
Yeah, Greg Hill, one of our good friends from, of course, he's involved with Freedom Free for All over there in Victoria, BC. Great guys, fantastic guys.
Somebody
And
also
Greg
asked
is,
how many people are on WHAM, and so I don't know if they're mentioning, like, so basically, I guess the three main ones would be obviously Josh, yourself, then myself, but then you also, every now and then would have, I guess, Aaron
Chris,
Nakamoto.
yeah, and Chris Rice Crypto, of course, he's been doing a couple of reports as well. And
I'm not sure if he's still part
yeah,
of WHAM,
no,
because he's.
not sure. He's done some reports, of course, for us. But what I'm seeing, we've been getting a couple, of course, rainy steps again. Thank you so much. Every time me and Tim have been doing reports, we've gotten, now I think it's been sent twice to us or 3 times that we gotten, super chats from them. So that's fantastic. We really, really appreciate it. And then we got from Australia, we got Frank R, Mark of the Beast System. He says, and thank you guys for your work. We really appreciate it as well. All these super chats, keep BAM, going, and it's really great to see them coming in. We really appreciate it, guys. And of course, let me just talk a little bit more about the Red Pill Expo. I'm going down there. It's going to be the 7th to 9th of November. There's going to be lots of great speakers on a wide array of topics. Actually, what has ended up happening was going to be a small one-topic conference, but now it's actually 6 major topics that we have at every Red Pill Expo. So it's a small Red Pill Expo that you're going to have the chance to attend now in Nevada if you're around there,
Like
or
an intimate,
Phoenix,
more like
or in California.
setting.
Yeah, a little bit more intimate setting, and of course you're going to be able to meet none other than the great Deirdre Griffin that I of course work with on a weekly basis with Freedom Force International. So that's going to be a great opportunity for you to meet with like-minded people, network with people, make connections, so you don't feel so alone that you are like a lot of people feel alone when they go back home because there's nobody really to talk to about this. But what I've done here locally in Winnipeg as well is I'm slowly building up a community of people that are like-minded, that are working on different aspects of freedom. If it's developing something with computers, or if it's actually some politicians. I don't like most politicians, but there's a couple of few out there that are that have some good ideas, that are there for the good side of things, and are actually have power. What I really like is one of my friends, my wife curls with this guy's wife, and they're actually like I went to him, hang out with him on New Year's in his basement. He has a paper cutout of Trudeau and Trump, and I was asking like, so what are you doing with these two guys down there? I said, and he said like, yeah, no, it's target practice. He said. So that's what's interesting is when you go on the local politicians, the people that are actually very much more being able to be liable for their choices. A lot of them are, just normal people, most of them, because they actually have to, they can't be in a big city. You could just hide in our ivory tower, of course. And it's a lot easier to get away from the peasants. But when you're on the countryside, you actually have to be accountable. You are a part of the community, so you
let them eat Federal Reserve notes.
Yeah, exactly. No, it's I think we should wrap it up there, Tim. But again,
a couple quick. I see somebody else pointed out that the largest telescope, that the Vatican has a telescope in Tucson called Lucifer 2. I'm trying to look that up. It seems like they do have a big telescope. I think it was called Lucy, and it got spun into Lucifer. I don't know. It's my first. I think I do remember hearing about that.
Yeah, I've not heard about that.
Very, very, very interesting. I'll go down there and try to.
Very interesting. Yeah.
Try to check it out sometime. Yeah, a lot of talk about Zionist Jews and Israel and Rothschilds, and do we know the bankers are private? And yes, I think John and I do know that the Federal Reserve is private.
Yeah, just ask Jared Griffin.
Pay attention for 5 seconds, and he'll probably know. I mean, I've got a gigantic King's Ransom thing behind me to show that the money is owned by the crown. Okay, I'm scrolling down. How is Josh doing? He was in Istanbul last we heard. I mean, I think the last time, besides some messages going back and forth, I mean, you guys can check him out. I mean, you can follow his Instagram. You can go follow, his Facebook page. Right now, this is being actually also live streamed to my Liberty Advisor show page as well that I just created because I've been shadow banned from my other page that had 31,000. That's basically, I mean, if I live stream there, like 90 people out of 30,000 will see it. And it's just
and we're also working on getting more and more live streams as we are on so many platforms, Tim. So we've been talking about that as well, spreading the word and getting it out to everyone. So we're very excited about, like, we're branching out, trying to not be too dependent on these mainstream social media.
And we do have a question from Dave Bongo Slide, and I think he's asked this a couple times. Question again: if $1 is printed and then a second, how much is my dollar worth? And the thing is, it's not necessarily how much is your dollar worth, because your dollar will always be worth $1. Just like if you had 1 Bitcoin is always going to be worth 1 Bitcoin. It just depends on, hey, if I want to go buy this water bottle.
Yeah, the purchasing power of that of course.
And so the more
the face value would be the same, but the more you print, of course, like if you add $1 and add another $1, now the purchasing power is actually dropped by 50%. So yeah, it's 50%. If he says 50 cent in purchasing power is the current dollar that he held if you print another dollar. So that's right, but the actual face value is still $1, right?
And the dollar used to mean like a certain measurement of, at least in the pound. And I'm showing my Ring doorbell going off. So my Amazon CIA cloud in front of my house is going off, which means my kids are home. So I've got to get going as well. But no, definitely appreciate it. We are trying to work out some of the kinks. We're not perfect over here. Trying to give you guys good information. Smash the like button, hit the subscribe. Text informed to 71441. Get my book for free, and then puts you on an email list. And I don't think I've even sent out any of these emails yet. But it's a backup communication because guess what? Eventually, we're going to be kicked off of here because of the stuff that we're talking about, and it kicked off other platforms. So will a lot of other people that you like. So it's just a backup way to keep in touch. But do appreciate everyone's attention, and we are trying to work through things over here. It's not easy monitoring all this stuff and going live to these different places and getting articles and everything else. So definitely appreciate it, and thank you very much. And Tim Picciott and John Snyson signing off with the World Alternative Media. Find the truth, be the change.
Be the change. Yeah, so again, just at the end here, Cornelius, we did discuss corporate buyback, so please look at the live stream, and you'll definitely see all of that that we talked about.
Towards the end, probably I'd say about 80% of the way through. So if you just want to...
And we're putting out a report that has that in it, so... Yeah.
Yeah, and I'll have to I'll have to look into the Ring doorbell hacks. I know that they've been trying to get the police to say, "Oh, hey, do you want to make your neighborhood safer and have the police look into your Ring doorbell?" And no, I don't. Thank you for asking.
Yeah, that's exactly what I'm going to talk about actually when I do go to Nevada. So stay tuned.
Yeah, and then also I do want to hear you. I would like to get the synopsis on the 5G. I read a great. I wouldn't say it's great. It's talking about how it disturbs like all your cells and all this other stuff. But we'll save that for later. Whole another report. Whole another can of worms. But thank you guys for listening and watching. And talk to you guys later. Take care.
Yeah. Have a good evening.